Welcome to the Economy Magazine at I-24 News, where we provide a daily view on world markets and the global economy. I'm Natalie Ehrlich. Well, coming up today, Iran anticipates a new wave of investment, and the Suez Canal gets an upgrade. Let's start now with the headlines. Well, after a marathon negotiation into the night, the Israeli cabinet passed a state budget Thursday morning. 20 ministers voted for the implementation, while Defense Minister Moshe Yaalon chose to abstain. The overall budget for 2015 will stand at 329.5 billion shekels and will increase by 13.8 billion shekels for 2016. The deficit for 2015 to 2016 will stand at 2.9%. With cabinet approval, the budget will be opened up to the Knesset vote on August 31st. Well, economists and market watchers eagerly awaited an announcement on interest rates from the Bank of England on Thursday. The day was dubbed Super Thursday, as news on inflation was also expected. Following 2 years of solid growth there's been mounting speculation that the bank could hike interest rates before the end of this year. Well, Rio Tinto's first half profits plummeted 80%. The global mining company showed its net earnings of $4.4 billion last year fell to $806 million in the same time period just a year ago. The plunge is largely due to weak metal prices and also softer demand from China. Well, the UK's competition watchdog has accused pharmaceutical companies Pfizer and Flynn Pharma of charging, quote, excessive and unfair prices for an anti-epilepsy drug. Phenytoin sodium capsules used by some 50,000 people in Britain are made by Pfizer and sold by Flynn. Pfizer said it's cooperating now with the Competition and Markets Authority. Following Iran's historic deal with world powers, the country now looks forward to a new wave of investment and business from abroad.
Here are the streets of Tehran on the evening of July 14. These images were shot hours after the announcement of the landmark agreement on the Iranian nuclear deal. It provides for gradual lifting of sanctions starting in 2016. And with the deal comes new opportunities for foreign investors.
The lifting of the sanctions means that our businesses will be able to invest in Iran, our companies will start to trade with Iran.
With nearly 80 million people, Iran has the second largest market in the Middle East. The middle class is large and hungry for Western goods. But because of the sanctions, foreign companies are limited locally. The country is expecting to see an arrival of many investors, especially European. The French foreign minister landed in Tehran last week, just a few days after a visit from the German economy minister.
I am firmly convinced that after the step-by-step lifting of the sanctions, German companies can make a significant contribution to modernizing Iran's traditional industrial centers.
But competition is fierce. Some companies are already in full negotiations.
I've heard that American companies have contacted some Iranian companies, but not in the government level. And I think if the sanction is not completely over, especially on the United States side, this will not happen.
The lifting of sanctions and its rush of investors should provide a stimulus to the Iranian economy. Growth could reach up to 5% in 2016. And that could help reduce Iran's high unemployment numbers, because today, almost 1 out of 5 Iranians are out of work.
For further analysis, we have Meir Javandafar, the IDC lecturer, and he's here to tell us more about what's going on in Iran. Thank you so much for being with us today.
Thank you for having me.
Well, you cover this very closely, and you have very recently in depth because of this Iran nuclear deal. We're expected to see somewhere between $50 billion to $150 billion entering the economy. What's the more accurate number here? What do you project?
Nobody really knows. Even the Iranian sites, the news sites, they're not exactly sure. On the one hand, we hear that the amount that the government will get from all this will be $29 billion. The rest will go to the central bank. Another figure we hear is $6 billion. There's a lot in Iran. There's a lot of suspicion that people are not going to get the real number, because the government may want to do something with the money when it arrives in Iran and they don't want the public to know about it. There's a lot of lack of confidence.
Well, speaking about that, where are they going to put that money? What about Iran's proxies?
Well, you see, it costs only $200 million to support Hezbollah. Hezbollah is not that expensive. I mean, last year's budget for Iran was $294 billion. So 200 million is 0.07 of that. So Iran would have money to support Hezbollah anyway, even if the sanctions stayed. But of course, now they will have more money. But how much more are they going to give Hezbollah? I'm not so sure it's going to get all of a sudden get billions of dollars, probably maybe a little bit more. I think the majority of the money is going to go inside Iran for domestic projects, and also what the regime wants to enrich more than uranium is its own pockets. So I think what we're going to see is a very fast and efficient enrichment of the bank accounts of many corrupt officials in Iran, which don't belong to any transparent organizations. And this is something that the people of Iran are worried about, which is why the stock exchange initially after the deal went up, and now it's gone down, because people don't have that much confidence that the money that is going to arrive in Iran's economy, and they're going to get the benefits of it.
Well, do you think that we could see any backlash from the public, or do they just not have any power there to respond to that kind of occurrence?
Not even the president has power to deal with the corruption. In Iran, if you want to deal with the corruption, the key is in the hands of the judiciary. And the judiciary is very close to the conservatives and very close to the supreme leader. As long as the judiciary doesn't want to take steps to solve the problem of corruption, you're not going to get anywhere. And Rouhani wants to do that, apparently, because he can't run an economy with so much monopoly and so much inherent corruption. People expect him to push the economy forward, but he can't. His hands are tied. So he needs the help of the conservatives to fight corruption. And I'm not sure the conservatives are going to give him for two reasons. Number one, it will make him look good. But more importantly, the regime is worried that once you start going after corruption, you don't know where it's going to end, and it could bring instability.
It could go all the way to the top.
Well, I don't think they're going to go after Ayatollah Khamenei, but once you start going after, for example, conservative figures who are corrupt, more and more voices could say, okay, we're the small fish, what about the big fish? So corruption is the biggest problem, is the biggest ailment that Iran's economy is suffering from today.
Well, staying on this topic here of reform, do you think that all this business activity that we can expect, especially from Europe, is that going to impact the regime at all?
Well,
are they going to moderate?
Well, on issues such as human rights, I'm not so sure. The regime is very worried about, after watching what happened in Georgia and Ukraine before, of the velvet revolutions that we had. It's very worried about a soft revolution, soft war being waged against Iran. So I think, yes, there's going to be more business dealings, but the regime is very efficient at creating a firewall between economic development from the West and transfer of knowledge, and not transfer of knowledge, but increase in the level of liberal values from the West, or democracy or human rights. So I think they're going to create a very strong firewall to make sure that more business with the West doesn't mean more democracy, more human rights in Iran, because the regime sees that as a threat.
Well, that is a very fascinating point. Thank you so much for being with us today, Mirza Vandafar. Very much appreciated. Moving on now, staying in the Middle East, though, Egypt opens an expanded Suez Canal with much enthusiasm on Thursday, a centerpiece of President Sisi's efforts to stimulate economic growth following years of political tumult.
72 kilometers long and 24 meters deep. The site was fit for the pharaohs. Egyptian President Abdel Fattah al-Sisi inaugurated the second channel of the Suez Canal this Thursday, a project aimed at symbolizing the revival of the Egyptian economy.
The idea is Egyptian, the plan is Egyptian, the decision is Egyptian.
The objective is to double the traffic capacity of the canal, linking the Red Sea to the Mediterranean. And within 8 years, 100 ships will be able to pass daily compared to the 49 today. This second route will allow traffic in both directions, reducing the waiting time of ships from 18 to 11 hours.
We are trying to reduce the waiting time here, and also on the lakes. When the boat stops, it means the owner must pay the crew and fuel, but it also delays the delivery.
Built 146 years ago, the Suez Canal is a main source of income for Egypt, and it represents the country's independence in the 20th century. It's also one of the busiest waterways in the world, a key location of global trade. Almost 8% of the world's maritime trade goes through the Suez. And after a year of work and almost $9 billion investments, the second canal should boost the channel's revenue. $5.3 billion this year and expected to pass $13 billion in 2023. But the numbers are leaving some skeptic.
There will definitely be an increase in revenue, but are the figures announced realistic and credible? We do not know how they were calculated.
Meanwhile, Egypt is facing unprecedented waves of jihadist attacks. The Suez project serves to help present the country as a major player on the regional scene. The new regime wants to establish its authority both inside the country and abroad. Authorities hope that development surrounding the canal will become an industrial and commercial hub. Ports and a service center could line the banks of the canal. Over 1 million jobs are expected to be created in the next 15 years.
By building this new canal, we serve the world. Food, medicines, fuel, and spare parts will be delivered to the world faster.
However, Egypt's economy is still at half-mast. The government is hoping for an aggressive growth rate of 7%, but the vital tourism sector has suffered from the political unrest of the past 4 years. In 2014, there was only 9.9 million tourists, compared to the nearly 15 million visitors of 2010. The new Suez Canal has many promises to keep.
Now to provide expert analysis on the volatile Chinese markets, we have Cham Chester with us. He is the China analyst at Clarity Capital. Thank you very much for being with us today.
It's a pleasure.
We've seen these Chinese markets, very volatile sessions here. They made a comeback, but now fallen again today. What's behind that?
So we thought in June, when the stock market fell, that might be it. And then it declined by almost 30% since then, but then it was somewhat stabilizing in the last few weeks, July, and then it fell again by almost 10% just the last week. The causes really are the causes from the beginning. You're talking about a stock market which is built on borrowed money. It's fundamentally unstable, and the moves that the government was taking to correct that weren't necessarily getting down to the markets and making a difference. So the latest drop is really just more of the same of what we're seeing. In terms of what you're saying, is there an end in sight? There's debate amongst analysts, among observers. The trend, I think you could sort of see, is that it's going to get worse before it gets better. There's a chance that in 2 months' time, with larger economic numbers in China going down, the stock market in China is also probably going to drop by another 15%.
Well, you mentioned the government's aggressive efforts now to stimulate the market, but is that perhaps a hindrance?
When you think of China, you think of state involvement in the economy. And there's no question, if you look at the last 2 months, you rarely have seen any government authority intervene in its stock market to the extent that Chinese authorities have. What's interesting is that just this past week, in Southeast Asia, there was a conference looking back at the 1997 Asian financial crisis. And there were Chinese authorities there. And on the one hand, they used that forum to say, just like in 1997, when George Soros is seen and other people as having raided Asian economies and caused the market upheaval, they said it's the foreign speculators' fault again. And yet on the sides of that conference, Chinese officials also admitted that it was their own inexperience which has also played a result in a lot of the instability that we're seeing, and a lot of the instability we're probably going to continue to see.
Interesting point there. Lastly, where do you expect this market, or how do you expect it to impact the global economy moving forward in the short and long term?
So that's going to fundamentally be our concern. Outside of China, how does it affect us? On the one hand, very little. Why? Because Chinese rules limit foreign investors to less than 1%. So there's very little foreign money really involved. On the other hand, it's China. It's a tremendous part of the world economy. I'll just give you one example and see if we have time for more. Chinese consumers. Chinese consumers around the world are responsible for a huge percentage of tourism money, of luxury goods, of investing in real estate and others. If the Chinese consumer market is reduced as a result of the stock market crash, which is directly affecting Chinese consumers who own 80% of the stock market there, the impact on the goods that they purchase will be felt by people around the world.
And what was that other example that you wanted to bring forth?
Well, the other example is that the Chinese government has been staking a lot of its authority on opening up the financial system, which would bring in tremendous leverage to the Chinese authorities and the country as a whole in the coming decades. Xi Jinping, the president of China, it's been a major centerpiece of his policy. This obviously is a complete blowing up in his face. It was the Chinese authorities back last fall who stimulated the Chinese stock market and who said to common investors, this is a hot market, you guys should invest in this. Now it's blown up in their face. There's almost $4 trillion of lost earnings right now to Chinese consumers. Their anger is going to be directed somewhere, and they'll probably look back at their own authorities in Beijing looking for answers.
And you also think that the Chinese economy, do you expect it to shrink going forward?
Well, we just got new manufacturing numbers this past week, which showed that it slipped below 50%, the manufacturing index, which suggests that when it's below 50%, it's contracting. The numbers are probably going to decline more. As a whole, we knew that 2015 was going to be a year of declining numbers. Stock market falling is not going to help that out. We should be expecting in the next quarter more cautionary numbers from the Chinese economy.
And should people all over the world, especially market watchers in the U.S., be worried now about the global economy because of China and these ratings that we're seeing there?
So another example to what I said before about the consumer market, housing. Housing markets around the world, one thing that's been getting a lot of attention in New York is Chinese money flooding the area and investing in the New York real estate. Much of that money is coming from wealthy Chinese who have now been directly affected by the stock market crash. Housing is going to take a hit in New York, in Sydney, around the world. That directly hits the pockets. Another great example I can give you, which I think is very real to a lot of people, universities. Almost 1 million Chinese have been going overseas to study in the last few years. The numbers are astronomically growing. Those Chinese who goes overseas, they pay full tuition. No other students do that. Universities have been banking on this tremendously in leveraging their growth patterns. Universities around the world will take a hit, real estate will take a hit, and many others as well.
More indication here of the power of the Chinese consumer. Thank you so much for joining us. Sam Chester of Clarity Capital. That wraps up our show today. Do stay tuned every day from the Jaffa Port in Tel Aviv for all your global business coverage. I'm Natalie Ehrlich. Thank you very much for watching.